There are three major changes happening right now that are quietly wrecking millions of Americans financially, and most people won't realize it until it's too late. Listen, if you thought your credit score wouldn't take another hit, or you thought student loan forgiveness was safe, or you thought the government had your back, unfortunately, you were wrong. But make sure you stick around to the end, because the number one change is something every borrower in America needs to act on this week, or risk drowning in debt they thought was forgiven. Now, there are going to be three very important changes that we're going to cover today, but before we jump in, make sure to drop it in the comment section. I'm watching my money in 2025, so I know that you're locked in, and trust me, by the time we hit number one, you'll be glad you did. Jumping into number three, banks are slamming the door on low credit scores. Let's go ahead and kick this off with a bombshell. If you have a credit score under 700, you're basically locked out. I know that's crazy. 700 used to be great. People are like, oh my God, I hit a 700. Not anymore. Because banks across the country are tightening up lending on people with low credit. Personal loans, denied. Car loans, higher interest rates. Credit cards, slash limits or outright shut down. And the big question is why? Because the CFPB, the Consumer Finance Protection Bureau, is basically powerless. They've been crippled now. They went from 1,600 employees all the way down to 200 employees. And then their funding on top of that got slashed in half. Now, there is still pending litigation where they're trying to bring these people back, but we don't know what's gonna happen, to be honest with you, and it's not looking great. Under the Trump administration, enforcement actions have in fact collapsed, which means banks now know there's nobody watching them anymore. So they're cashing in, raising interest rates, hiking fees, and cherry-picking safe borrowers, meaning the rest of America gets shut out. Now let's put this chart up on the screen. Now this is from an article with the Wall Street Journal. Take a look at this change in new credit card account openings from a year earlier. As you can see, they were massively up before. American Express was just crushing it with account openings, and of course, now everyone's starting to take losses. Now pay attention to where they're at in the second quarter. Everyone is below the threshold, which is pretty wild, except for Wells Fargo. Apparently Wells Fargo doesn't care, or maybe they do, maybe they don't, but drop it in the comment section. Let me know if you've been denied for any type of credit card, depending on where your credit score is at. Tell us the bank and what your credit score was, and not your actual Credit Karma score, your FICO score, okay? Now, another crazy fact that a lot of people aren't gonna talk about on YouTube is the fact that Chase Bank and American Express explicitly pulled out of all affiliate deals with YouTubers, TikTokers, Instagrammers, Facebookers, any social media influencers, because they are getting a higher level of delinquencies from those specific referrals. And so what you might see out here on YouTube now is a lot of people pushing specific credit cards because they actually get paid by those. I only put my referral link in there that's from my personal credit cards because I don't really care about the money coming from credit cards because it's not necessary for my lifestyle or my life. But for a lot of these YouTubers that base their entire budgets and lifestyles on, they're pretty much cooked. Now moving on to number two, which is a huge one. Medical debt is back on credit reports. A lot of people thought that medical debt was wiped clean from your credit history. That was 2022 and 2023 and 2024. This is 2025 and the game has changed again. Hospitals and third-party collectors are now reporting medical debt again. Even the stuff under 500 that used to be excluded, it's supposed to be excluded, but it's still coming back. And of course, the question is why? Because under weakened regulation, credit bureaus are no longer obligated to keep that stuff off of your credit report. And unfortunately, that means one ER visit equals a 20-point drop. Miss a bill, your score is going to tank. And what does that honestly mean? You're trying to refinance your car? Denied. Apply for a mortgage. Interest rate jumps 2%, maybe all the way up to 8%, which is pretty crazy. Want to get a business loan? Not with a medical collection sitting on your credit file? Now listen. Every hospital has charity care, and charity care helps people that are low income have that debt completely wiped away. I'm gonna drop a link in the video description, and this charity care organization is 100% free. They will see if you qualify, help you through the entire process, and I'll put some other resources for anybody with medical debt in the video description so you can go through there and see what you can qualify for. And again, there's no cost to this whatsoever. It's 100% free. And here's my pro tip. Start pulling your credit reports monthly. You can pull all three of them for free from Experian, Equifax, and TransUnion from annualcreditreport.com for free once a week. Watch out for anything medical, dispute it fast, because if you don't catch it, lenders will, and they won't be kind about it, and you'll get denied. I want to give a special shout out to all my beasters out there that are working hard to fix their credit using Dispute Beast, the most advanced AI credit repair software ever created that comes with the 110% money back guarantee. But specifically to Luis. Luis's credit score went up 261 points after just one round with Dispute Beast. And Jency's credit score went up 225 points after just one round with Dispute Beast. But let's not forget James. James's credit score went up 207 points after just one round with Dispute Beast. Dispute Beast's link is going to be in the video description and pinned at the top of the comments for anyone that needs to fix their credit. And the number one massive change, student loan forgiveness just got crushed. The SAVE plan killed. This is the big one. On August 1st, 2025, interest started piling up on millions of student loans. And most people don't even know it happened. And the big question is why? Because a federal court blocked the SAVE plan, Biden's flagship student loan forgiveness plan. So that 0% interest is gone. The faster forgiveness schedule, dead. That promise of affordable payments, deleted. But that's not all. On July 4th, 2025, the big beautiful bill was signed into law, and that is phasing out the SAVE plan entirely. New borrowers, you're locked out starting July 2026. Now the current SAVE users, you're being kicked off by July 2028. And if you don't manually switch plans, you'll miss out on forgiveness credit and rack up thousands in compounding interest. So the fix? A brand new repayment assistance plan, or RAP, which does count towards public service loan forgiveness, but it's not automatic as it used to be. So you need to take action now. But here's what you can do right now. Log into your student loan portal, check your repayment plan. If you're on SAVE, start the process to switch to IBR or RAP. But if you're going for a public student loan forgiveness, make sure your payments are still counting. So here's a bonus. The borrower defense rule is frozen, and if you were defrauded by a for-profit school, don't count on relief just yet, because the borrower defense to repayment rule is in legal limbo thanks to a Fifth Circuit injunction. Right now, you can file claims in groups and may not be able to file until you default, that's absurd, but unfortunately it's real. Now, the Supreme Court is hearing the case this year, but until then, you're stuck. There's no forgiveness and no relief. So if you're hoping to wipe your debt from a shady school, this pause could cost you thousands. Last part's the most important. So let's break it down. Let me give you a quick recap. Number 3, banks are closing the door on low credit score borrowers. Number 2, medical debt is back on credit reports, even the $500 or less, unfortunately. Number 1, student loan forgiveness under SAVE is dead. Listen, this isn't fear-mongering. This is real, legal, financial reality of 2025. And the people who stay asleep on this, they're gonna wake up in 2026 with higher balances, lower credit scores, and fewer options. But now you know, and if you act today, you can still protect yourself. And make sure to hit that like button, because I'm going to keep dropping videos that tell the truth about what's happening with your money. And before you go, make sure to drop a comment. I'm switching plans if you're jumping off of SAVE, or CFPB is broken if you're feeling the effects of this crackdown. Make sure to stay sharp, stay ready, because 2025 ain't playing fair, and your financial future depends on what you do next. And if you have any collections or charge-offs or any negative items that you need to delete from your credit report, make sure to watch this video right here, because it's going to teach you how AI can do all the work for you, mail the letters, and it comes with a 110% money back guarantee. And if you felt that I brought you some value in this video, make sure that you don't forget and subscribe to increase your credit score.